Miguel, we're going to start by looking at some of the questions that investors have been asking us. So I'm going to start by dipping into this
Go ahead, Chee Koon.
How would you characterize 2023? Let me start first. If I were to use one word to describe the year, it is really about a year of challenges. There were many things that we tried to work very hard, but there are big forces at play that were beyond our control. Geopolitical environment was uncertain. There was the tension between US and China did not improve. We have the war unrest in Ukraine. And of course, the situation in Middle East didn't help. And the other thing that we were seeing, at least on the business side, we see an interest rates environment, when we're operating in 2023, that was increasingly rapidly without any end in sight. So that was the kind of environment that we're dealing with. But even though people found it challenging, we continue to stay very focused on the big picture, knowing that at the end of the day, we are trying to build a globally competitive asset management.
Yeah, I think last year was indeed a very challenging year, and we always describe last year having a perfect storm for the real estate investment business. Our number may not come across as being strong last year, but you look at our total PATMI, we're down by $600+ million. But the number really is all caused by the fair value losses. So in terms of cash PATMI, we're only slightly a tad below what we were compared to 2022. So that's allowed us to continue to declare the 12 cents of dividend to our shareholders. I think that's very important for us to look at that. Even in a very challenging year, we still can maintain our cash position and generating the kind of cash that can deliver our commitment to the companies.
Yeah, Miguel, you want to, since I did the last one, you want to
Sure, my turn now, Chee Koon. Yes, we take turns. The question is, how is CLI dealing with all these issues of high interest rate, geopolitics, pressures, and economic headwinds? So what are the things you think we have done right? Let me start first, and I let you carry the next one. I believe that from the board point of view, having a strong and pristine balance sheet is probably the most important consideration to run a company through the headwind that we had last year. And capital management will be probably key for us. And I must say coming out last year, our balance sheet continued to be very strong. Capital management was strong. We're able to keep our interest rate in a very high interest rate environment to below 4%. Because of that, we're able to keep our debt equity ratio also in a very healthy percentage of 0.56 debt to equity. With that, we're able to still preserve over $6 billion of dry powder. And that dry powder really gives us a lot of further opportunities in the future. I'm very pleased that the ability for us to preserve the balance sheet, to be able to preserve the cash, hopefully will come out stronger out of 2023.
Yeah. I just want to take a step back to look at what we have done. Actually, the board and the management over the last few years have really repositioned and transformed the company from one that is very developer-led to an asset management company. Starting first with the Ascendas-Singbridge merger that give us access to different asset classes, different countries, and deepen our asset management capabilities. And subsequently allowing us to restructure the company, where we privatize the development arm and really growing the asset management business. And the reason why we had done all this restructuring is long-term we want to build an asset management company which is asset-light, focusing on fee income. And if you strip down and look at what we have done over the years, we have the listed REITs, we have the lodging management, we have the commercial management business, and the private equity funds business. The lodging business, I think from in the past used to be very asset heavy. Today we are the leading player in the service apartment space. Fee income is strong, growing very well, riding the wave of recovery in terms of travel, lodging, hospitality. I think that's giving us a very good run in terms of the fee income growth. In terms of the listed REITs, we are one of the, I would say, the bigger and more prominent sponsors in the S-REIT space in Singapore. Doing well, the fee income is perpetual in nature and helping us to build a very resilient income stream. The commercial management, I think the number speaks for itself, very dominant, and we see very healthy margins. And the fourth vertical, which is a private equity fund, which we are trying to build. As in all business, all startup, it takes time. We are laying the foundation, building all the capabilities in the different countries, talking to all the different investors. And over time, as we raise more money and we deploy, not just deploy successfully, I think that in the long run, the company will have a very strong, not just balance sheet as what you had earlier alluded to, but also strong earnings ability that can build a long-term enterprise value for CLI and for the shareholders.
Yeah, I agree with you. The point, we talk about numbers a lot, but your comment about building capability, I think that's a very important side of our business. And I believe that besides from management, I think we brought in some very good people, build the right culture, build the right type of collaborative working environment. The board also been strengthened. We brought in some very good directors, the directors that can really help us to grow the business, who understand the domain of investment. And I think between the board and the management and the work we've done in the last year, we can only take the company further in the years to come.
Yeah.
I guess you should pick the next one.
Okay, what are your priorities for 2024? Let me take this
you should do that.
question. I would say 3 priorities. First, it is to step up on the pace of recycling, to reduce our asset base, grow more fee income, and to give us more ammunition to continue to look for investment opportunities that can yield higher returns for our investors. That's priority number 1. Priority number 2 is to broaden and deepen our capabilities outside of Singapore and China. I think we've done very well in Singapore, China. We need to do a lot more to broaden our capabilities in markets like India, in Japan, in Korea, in Southeast Asia, in Australia, so that we are truly one of the best asset managers in Asia Pacific. I think this is something that I want to prioritize. And the third thing that we need to do, it is to strengthen and broaden the relationship with different capital partners, not just on the public listed side, but also investors on the private space. Because at the end of the day, we need to, when you find good opportunities, you want to have capital partners that will follow alongside us. Then you can truly grow the funds under management business.
Yeah, I think these are all very important priorities. But you've moved me to say one thing is that at the end of last year, we achieved our $100 billion FUM target we set out for the company when we set up the new company's capital investment about 2.5 years ago. Now we have set a new goal, a very ambitious goal, about in the next 5 years, we're going to double that number to $200 billion. And of course, all the pistons have to be firing in order for us to achieve that $200 billion. But we like that ambitious target, and I think we are very confident with all the good work and all the effort put in, we'll be moving along and to achieve that $200 billion of FUM target.
Yeah, no pressure. Yeah. No pressure. Okay, next one. Coincidentally, this is a question of how are you going to achieve this $200 billion target, following on the comment that you just...
you should go ahead. Management should have a say on this. Yeah.
If you look at the business, you look at the fundamental, the way how we have been growing the business, just on the listed REITs, if we assume a 8 to 10% growth over the next 5 years, we should be able to achieve about $140 to $150 billion. And if we continue to grow our private funds business, I think 150, 160, I don't think that's really an issue. But what we need to do is to complement this organic growth with potential M&A. And we have 5 years. We have been spending time looking at M&A targets. I think the 3 principles that I always mention about looking at M&A, it's about how does it help us strategically in terms of building new capabilities? Are we able to look for a platform that we can pay a fair price that is earnings accretive in the long run. And the third important criteria is the team that we are acquiring, does it have the same value system, and culturally are we able to work together? Because you can be investing in a platform, investing in people, and you aren't able to work together, you will not be able to unleash the full potential and get it to grow to that level. So yes, $200 billion is a target that we set. It is ambitious, it is challenging, but I believe that if we execute well, work well together with the team, organically and inorganically, we should be able to achieve it.
Well, let me draw the card this time, Chee Koon. Question is, can you sustain the 2023 growth in fundraising this year in 2024? I think you should answer this question again.
Yeah, I mean, looking at where the macro environment is, we think that the interest rates, the peak of the interest rate is behind us. We should see things improving, at least going into the second half. I think that will open up more fundraising opportunities on the listed space and also on the private side. I must say that after spending efforts in building capabilities on the ground, boots on the ground in the different markets, I think as a platform, we offer interesting opportunities for global capital. They are looking for value add opportunities in Asia Pacific. That would be a pool of capital that I believe we want to build and tap on. And the other pool of capital will be in terms of domestic capital, and that's growing rapidly in deep markets like China, in Japan, in Australia. And how can we tap this pool of capital that's looking for high quality, but maybe lower yielding assets managed by high quality managers that can look after the assets, making sure that we can protect and deliver high quality, consistent returns for these domestic investors. Yeah. So quietly confident.
Good. Yeah.
Okay, Miguel, this question is around the organization's culture. How do you describe the culture and how will it evolve further? Maybe, as the chairman of CLI, I can trouble you to take this question first before I add on.
Let me give you a crack first. I think it's important for any organization to stay very focused what they believe in the purpose of the company. For us, for CLI, I think the most important point is to really focus on the positive impact. And I like your motto. One is really to think big and then to do the right things and then make what you do last. So I think the organization will continue to pivot along these three mottos that's important for us to drive our culture, our value, and our purpose going forward.
Yeah. So I must say that with the support from the board, I think the management has spent a lot of time in shaping the culture. I think what we have done is to, apart from agreeing on the big picture strategy, making sure we pull in the right talents to help us to execute the strategy, making sure we attract people not just with the capability but with the right value system, and creating a culture where people feel empowered to act, feel that they can do the job to the best of the potential, find that they can enjoy the work, find that they feel safe to speak up, to challenge, and to make a difference. I don't think we are quite there yet, but directionally, I see a lot of positive signs. And I feel encouraged that if we can continue to focus that and get people to corral around this culture, that we will be on the way to build a great global competitive company.
Good. Yeah.
Okay, let me see. I think this is the last question for us. If you could sum up CLI's focus in the coming years, what would it be and why? I think I will have to do this. The most important focus would be to make sure that we focus on driving the returns, shrinking the size of the balance sheet, improving our capital management, drive double-digit returns on equity, and making sure that we can continue to focus in building capabilities and seizing great opportunities that are coming up, in the coming months, and make sure that we execute well and deliver good returns and build great enterprise value for the company?
It's important for us to look at where we are strong in. In Singapore, Southeast Asia, and India, where we have very long track record, I think we should continue to expand our business there. And then in markets, the mature market like Australia, like Korea, like Japan, where there is already a very mature market, we have been there for a while also. We should continue to expand our product offering in the market, and to also give the investor more options, more choices in our business for us to grow further in that. We need to continue to look. Yeah. And M&A is going to be, I think, abundant opportunities. If we are selective about it and find the right match, I think it really will be what I call the icing on a cake in order for us to build a really great company going forward.
Yep.